Welcome to Stocks Review. Click the subscribe button for more up-to-date stocks and portfolio review. Today we are going to take a look at NIO. Stock ticker symbol NIO. It is headquartered in the China and service region only in China. You may ask why we should care about where the company is headquartered? This is because companies in developed countries tend to be better regulated, whereas companies in developing countries tend to have higher growth, but also more risk. Companies that are headquartered in authoritarian states also have higher political and regulation risk. The service region may give us a clue of the company's overall stability and long-term growth potential. It has a market cap of 32 billion and is considered a large cap company. The market cap is an important metric because companies with larger market cap often have more pricing power, liquidity, and lower failure rate, whereas companies with smaller market cap tend to have more growth potential. What sector and industry the company is in greatly influences its ability to deal with market uncertainty. It is in the consumer discretionary sector and automobiles industry. NIO designs, develops, manufactures, and sells smart electric vehicles in China. The company offers 5, 6, and 7-seater electric SUVs, as well as smart electric sedans. It is also involved in the provision of energy and service packages to its users, marketing, design, and technology development activities, manufacture of e-powertrains, battery packs, and components, and sales and after-sales management activities. In addition, the company offers power solutions, including Power Home, a home charging solution, Power Swap, a battery swapping service, Public Charger, a public fast charging solution, Power Mobile, a mobile charging service through charging vans, Power Map, an application that provides access to a network of public chargers and their real-time information, and One Click for Power Valet service, where it offers vehicle pickup, charging, and return services. Further, it provides repair, maintenance, and bodywork services through its NIO service centers and authorized third-party service centers, statutory and third-party liability insurance, and vehicle damage insurance through third-party insurers, courtesy car services, and roadside assistance, as well as data packages and auto financing services. Additionally, the company offers NIO Certified, a used vehicle inspection, evaluation, acquisition, and sales service. NIO has a strategic collaboration with Mobileye for the development of automated and autonomous vehicles for consumer markets. In short, it is a company considered as China's Tesla. Despite its recent drop, it has a 5-year price return of 90% and outperforms the SPY. The 5-year price chart may help us evaluate how a company performed recently and its ability to weather global events, such as trade war, pandemic, and supply chain issues. It has a 5-year compound annual revenue growth rate of 64%. The revenue growth is consistent and the revenue trend looks very strong. The revenue trend is important as growing companies often have sales go up first, followed by profit growth. On the other hand, when sales become stagnant, it may also give us a hint that the growth phase of the company may come to an end if no critical change is made. It is not profitable now. The net income trend looks like, although being unprofitable, it is on the right path to profitability. The net income is one of the most important metrics an investor should be aware of. In the long term, stocks always follow the earnings trend. It has been issuing more shares in the recent years, probably for funding its growth. We should always follow closely if a company is buying back or issuing more shares, as both of these activities greatly impact the return shareholders can get. It does not pay a dividend yet. The overall shareholder return of NIO is quite good and slightly outperforms the historical performance of the SPY. The total return and annual growth rate history of a company can show us what the performance trend was and how it had navigated through difficult times. Most companies tend to perform similarly with a slight decline in growth as time goes by. NIO has a 4-year total return of 90% with a 4-year compound annual growth rate of 17%. If you had $1,000 invested 4 years ago, you would have $1,900 now. Currently, the price is at around 17 with a 52-week high at 55 and 52-week low at 13. It is near the lower end of its 52-week range. It has a PE ratio of minus 17.5 and forward PE ratio of minus 36. It has a cash position of $2.4 billion and long-term liabilities of around $2.45 billion. The ratio of cash, debt and market cap may help us evaluate the default or bankruptcy risk and what percent of your share is eroded by debt. Higher debt also has a higher cost in an elevated interest environment. NIO is considered a no-moat company according to Morningstar's rating. Now, about the future projection. Currently the margin is minus 29.3% and future margin after 5 years is expected to be 15.3%. The margin is expected to be increasing a lot after 5 years. The company's margin and moat reflects the pricing power of the company, and the projected trend is also important. We want to own a company that is able to stay profitable and relevant. It has a 5-year forecast revenue compound annual growth rate of 39.3% and 5-year forecast EPS compound annual growth rate of 9.4%. The near-term growth is expected to be very good. It has equal beats and misses of analyst consensus EPS estimates in the last 4 quarters. That's not an impressive result. The overall analyst recommendation rating is a buy with trend shifting towards hold recently. The rating trend gives us a clue of the changes of what analysts thought about the stock. Out of 26 analyst 1-year price targets, the range is 20 to 87 with an average price of 44.7, which is well above the current stock price. The discounted free cash flow model is a widely accepted method for valuing a company. Here we present 3 kinds of discounted free cash flow model results for a more comprehensive review. If we run the DCF perpetuity growth model, the fair price is 23.6 with an upside of 30%. If we run the DCF terminal EBITDA model, the fair price is 15.6 with a downside of 13.9%. If we run the DCF terminal revenue model, the fair price is 28 with an upside of 55%. Now we compare NIO with U.S. Treasuries and SPY. It cannot be emphasized more that the U.S. 10-year Treasury yield is one of the most important numbers to keep in mind when investing in stocks. The 10-year Treasury yield affects the valuation multiple of stocks like gravity. The higher it is, the lower the stocks are valued, including all the S&P 500 companies and all the stocks in the world. Currently, the 10-year Treasury yield is around 2.9%. The SPY is considered one of the safest and most liquid ETF for investing in the stock market. Big funds and investors directly compare the risk and return of investing in SPY or in individual stocks. The historical return of all stocks follow the earnings trend long term. However, the real return is often reflected by a mix of dividend and buybacks together with revenue or profit growth affecting the valuation. The return yield of SPY is at around 10%. The SPY has an average forward PE around 18.8 now. NIO has a dividend plus 10-year growth forecast plus shares buyback yield at 5.4% and a forward PE around minus 36. We have to be cautious that this is just a rough prediction of NIO's future performance. The forecast can be changed at any time, and the actual revenue or net income the company is able to get depends heavily on the true market condition. Looks like NIO is more expensive than the SPY, and SPY looks like a better buy with a more stable return estimate. We will try to summarize all the information above to give us an overall impression of NIO. In summary, NIO is a large cap and profitable company with good growth and no moat, and probably overvalued now. If NIO can deliver more growth than estimated and turn to profit faster, it may be a stock to consider. Now that's a review for NIO stock. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.